Hello everyone, my name's Becky Bowden and I'm a Regional Sales Manager at London Square. We're now 7 weeks into lockdown and things are starting to change. So following our highly popular webinar, Mortgage Advice During COVID-19, at the beginning of the lockdown, London Square Intelligence has asked David Hall of Oriel Finance to provide you with a mortgage update as the market continues to evolve. Hopefully David's update will instill some confidence that the property market is bouncing back and provide you with some reassurance. Over to you, David.
Great, thank you, Becky, and thank you, London Square, for having me once again. As Becky mentioned, I'm David Hall, partner at Oriel Finance, we're an independent mortgage broker, and we will give you a bit of an update of what's happened since our last presentation today. We're looking at the property market news, lender updates directly, what's been happening with surveyors, a bit of a focus on Help to Buy, mortgage holiday update, what's happening to loan to value and products, income multiples, and then a bit of a rate update. Shouldn't take more than 5 or 10 minutes. So what's been happening with the property market? Well, doors are once again being open for house viewings, but strict social guidelines are in place. It's an important move for the property market. There's been a lot of pent up energy, and that's now being released. We'll go through some data here. 5.2 million visits, up 4% on Rightmove from Wednesday last week. That was when the sort of easing in lockdown measures was announced, and it's great to see that is moving. Rightmove reported 111% week-on-week increase in sales listings on the day the market reopened. So things are looking very, very positive. That supply is coming back into the market and hopefully dealing with some of that pent-up demand. We're seeing return of agents and developers coming back into the market. Most major agents open their doors on Monday, and most major surveyors have been accepting valuations, are out at viewing properties for values since Monday. A bit of a lender update. I think one of the focuses of my previous presentation was the human resource issue, the movement of large swathes of lenders' staff from front office into that middle and back office and dealing with issues with mortgage payments. That has now subsided, and people are moving back into their original teams, and lenders are certainly open for business again. We're seeing a real return to norm within the lending sector, and I will focus on that in a moment. Well, with surveyors, as I mentioned, all major surveying firms are back out and accepting valuation instructions, which means that pent-up supply or that pent-up demand in the mortgage market is actually being fulfilled. We're seeing, and we'll expect to see, a continued delay in application to survey in the market, because there's only a certain amount of surveyors that can operate, and it's harder and takes longer for them to actually view properties. They have to observe those strict protocols, but that is going through the funnel, and we are seeing offers being produced. The best sector to respond by far is new homes. So that new build sector, due to the quality, transparency of information around properties, and really just the way that the new build sector is able to gear up with PPE and other sort of essential guidelines for allowing surveyors to enter properties. New build homes have no occupants, so they're always empty and able for people to view. They also have online brochures, virtual models, computerized images, virtual tours, vacant properties, and consistent delivery of PPE, which as I mentioned. Help to Buy is another success story, really. All major lenders are back accepting applications. Likes of Santander, Halifax, Barclays, Nationwide and NatWest have all returned to offering products in the 20% national Help to Buy sphere. They are the major players in the space, and they are back with lending at the levels that we had pre-COVID-19. In fact, due to the lack of transactions that have happened in the market over the last sort of 6 to 8 weeks, Help to Buy and the Property Information Form, the PIF, is more up to date than it's been at any other time in the last probably 24 months. So from the submission of the PIF form to being accepted is now taking about 2 days. Pre-COVID-19, as the market was very, very busy, this was taking up to 28 days to get the response. So that is really good news for that Help to Buy sector. Mortgage holidays, the FCA is in consultation at the moment. with various lenders and sort of the government to look at extending the 3-month payment holidays. At the moment, the suggestion is that this may be available to certain borrowers in the right situations or in the wrong situations, depending on how you look at it, or up to 12 months. Watch this space and we'll provide another update on that when we hear it. It's expected to come out into the market in the next 2 weeks. Loan to values, another one of the issues that we highlighted in the previous webinar, have for the most part returned to pre-pandemic levels. Some lenders still have caps on maximum loans and larger purchase prices, so anything where you're looking at a purchase price over £1.5 million, there are some restrictions on lending, but anything under that, it's pretty much business as normal. 90% loan to value loans are possible, although the pricing is not quite where it was pre-COVID-19. There are no mortgage prisoners in the market. Again, something that we touched on in the previous webinar. If you've seen a decrease in your property value over this period of time and you think that you're at less than 5% deposit, so more than 95% loan to value, there are solutions available to you directly with your bank, and they will not look to put you in a situation where you are financially disadvantaged. Income multiples, another sort of key aspect of the market to see how much people can borrow, are back to pre-COVID-19 levels. Some banks are taking a slightly more cautious approach to lending. So people like Santander, Nationwide and NatWest, they've adjusted their affordability calculations with regards to bonuses. So they're limiting slightly how much you could borrow. But the vast majority of banks in the sector are being pragmatic and offering loans at very similar or exactly the same levels as they were pre-pandemic. Some banks are insisting on clients signing an income material change attestation form. Really, that's just a form that says that you don't expect your income to change in the near future. What they're looking at is is being wary about a client having a large potential bonus or large commissions up until the implementation of the lockdown, and making sure their income isn't going to be materially affected moving forward. They just want to make sure that long-term affordability has been assessed and that the lend is sensible under the eyes of the regulator. Rate updates, historically low rates returning to the market, 2-year fixed rates at 60% loan to value at 1.19%, 5-year fixed rates at the same loan to value for reference at 1.41%. So you're looking at a 0.22% 2 to 5 year fixed rate premium. Really what that's saying is that the market is expecting rates to be low for that medium term. And I hasten to say that the market can be wrong. This is just the lenders' pricing is where they're buying and selling their money within the secondary markets. But it shows that rates are competitive. Margins are returning to a very, very low level, and banks are fighting for that business. They want to get out there, they want to re-establish their lending books, and they want to be seen to be supporting the recovery of the market and UK economy in general. So I think in summary from today, it's really positive news from the lending market. We're not quite back to where we were 8 weeks ago, but we're pretty close. There's great opportunity in the market, and the lenders are there to help people borrow money where they need to. Thank you very much, and I will hand back to Becky to finish off.
Thanks, David. I think there's definitely some positive news there, and hopefully that will give a bit of confidence to our viewers. As David said, any questions, please feel free to get in touch with David at Oriel Finance, or you can email London Square as well at intelligence@londonsquare.co.uk. As David touched on, the industry is coming back, and London Square are happy to announce that our sales suites have now reopened with viewings by appointment only. So if you are interested in coming to view any of our developments, then please do get in touch, and there's more details on the website there. Thanks for watching, and we'll see you again shortly.